Hey, good morning, everyone. This is Vic from Forex Trading Academy. Today I wanted to go over about market structure. I've been wanting to do a video like this for a while now, but this is going to be video one of many more to come in reference to market structure. I'm going to try to make this as simple as possible, so let's get right to it. Right, today we're looking at currency USD CAD on the weekly time frame, okay? But before we get into the actual market structure itself, I want to say one of the things that I highly advise for those who are like one of those like visual learners, have issues spotting support and resistance, is go to your navigator tab, right, and then look for the zigzag indicator. I will click and drag, and then leave it as is, 12, 5, and 3. However, I have a black background, so I actually prefer this to have white, and then of course change this to 3. Again, this is all for visual purposes, guys. All right, so click on OK, and at this point, again, USD CAD weekly time frame. And as you can see, it won't capture all of the support and resistance levels like your higher highs, higher lows, or vice versa. But it will, right now with those settings, it'll capture the most important ones. If you actually go into your indicator tab for your lower time frames, if you go into the zigzag and the inputs, if you make this an actual 5, it will actually pinpoint more support and resistance levels. So just in case you have issues spotting those yourself. All right. So now I want to go ahead and let's talk about the basics of market structure, right? So market structure, you normally have, and let me go ahead and change this real quick. Properties. So you have the market go up, right? Then the market comes back down, goes up, and again market goes back down. Let's that move went up. All right. So with this, guys, right? Keep in mind, the market will not always. The market will move in waves, but the market won't always move in perfect waves. The market will do whatever it wants to do. We have no control over it, of course, but it is your analysis. It is how you look at the market that you will become successful, especially learning the market structure way, right? So market makes higher highs, comes down, higher low, higher high, higher low, higher high. Now the concept is that when the market comes and starts pulling back, it starts accumulating orders, right? Buyers kind of took a little bit of a breather, kind of stalled a little bit, so now sellers are coming into the market, or buyers are actually getting out of their buying positions and now actually close their positions. So the market starts to pull back, and eventually you might see it. The market will come and tend to pull down to the previous higher high. But again, like I said, guys, it won't always work that way. The market sometimes at certain points, you'll see the market pull back to this point, and you'll get a very minor retracement, like I don't know, maybe like a 32 retracement on a Fibonacci scale, right? And the market will then continue to go up. Now, like I said, so a lot of people have issues knowing how to look for these actual waves, or when to actually get into the market. Well, realistically, the big issue with everyone is, or not everyone, but with some people, is that okay, even though the market is doing these waves, especially like where we're at right now on the weekly time frame, right? They within this wave, and I'll go ahead and zoom in so you guys can see a little bit more. So right here, right? Let's take this for instance, and again, guys, I can clearly see these higher highs, higher lows. So I'm going to go ahead and take the zigzag indicator for better visual. All right. So, but what I want to show you guys is, for example, let's take this wave for instance, right? You got your higher low, higher high, higher low, higher high, higher low, and then your higher high, right? So if we were to go ahead and plot this, right, you got your there, there, and there, right? Of course, you got a nice little, you got another one right here, but you guys get the point. There you go. So now with this, these are pretty big waves, right? And now for you wanting to enter the market, you're like, man, I want to catch a wave like this. Just a wave like this on the weekly time frame. We're talking about 2,100 pips, 21,000 pips. Now, let's be honest. Are you going to really catch 21,000 pips? Not really. But let's go down to the lower time frames. As I like to look at the big picture and then work my way down. All right. So we see what the market did here. So let's go down to the daily time frame. And as you can see, so like let's start with our first leg, right? Our first leg, you can see, guys, the market goes up, kind of goes sideways a little bit, goes back up, down, and it just continues and so on. The market will do this. That's why if you are trading in a higher time frame, you want to get your entry on a lower time frame, keeping in mind that, remember, your big picture, the reason why you're getting into this trade is because of what you saw on the daily or on the weekly time frame. Now, like I said, an entry point at the daily time frame or at the 4-hour time frame, whatever you use for your entries, is highly important. But the big picture overall is the most important concept here, because that's where the actual market is actually going to. Now, on the 1 hour, if you go down to the 1 hour, the 4 hour, it may take some time for you to actually find a really good entry point into the market. So you won't necessarily catch, again, all of the pips, or you might have gotten in a little bit too early. But again, it's all about this wave concept, right? So again, going down to the daily time frame, this leg on the weekly, it just looked like a straight shot up, right? But realistically, on the weekly, even though it looks like it's going straight up, when you go down to the daily, it still has its minor waves. Same thing if you were to go down to the 4 hour, right? I'm going to go ahead and highlight this square within this other square, and let's try to look for it on the 4 hour time frame. Where is it? No. Oh, here we go. Okay, so you see right here, guys. Go ahead and zoom in. Right there. Again, 4 hour time frame. It has its own little waves, right? So again, no matter what market, what time frame you trade, the market will always move in waves, and they're not going to be perfect waves. And the reason why I bring this up is because, for example, we go to our weekly time frame, we go back down here, right? Let me go ahead and delete this. You have your first wave. The market comes down. Typically, the market will tend to normally do what it did over here, right? The market comes down, gets a little bit of breathing, and then picks itself back up. The market will then go ahead and pull back. Well, at this point, usually the previous high, that's where the market will tend to come down to, right? Again, it doesn't always do that, as this point right here proves my point. Market will not always do that. If that was the case, this would be way too easy for other traders to do, and everybody would be successful at trading. And obviously, we all know that is not the case. So the market comes up, comes down, up, down. Now, there are some traders who love to use a Fibonacci. That's going to be a whole different video, a whole different class, and I'll go ahead and show you guys how to do that later on in the future. But most important, I think, for you guys, is to learn first market structure. If you don't know how the market moves or how to analyze the market properly, it doesn't matter if you know how to use Fibonacci or not. You're just not going to be successful at it. Okay, but it kind of proves my point, guys, here. So as you can see, the market pulls back down to the previous high and then forms a new higher high. Now, reversal, right? Look at this. Nothing but red candles right here. I'm going to go ahead and kind of shrink this down a little bit to narrow what you guys are looking at right here. There we go. So I can go ahead and we can go ahead and go down to the daily once again, right? Go down to the daily, and here we go, guys. same thing, right? Higher high. Well, at this point now, right? Look at this higher low, right? So the market comes down and actually kind of breaks it. It breaks the higher low. So I'm gonna go ahead and put a horizontal line so you guys can see that there, right? It breaks it, but then the market comes back in. Now, I like to look at this as ranges. Like this is a range right here, right? And then this is a range right here, where the market is kind of moving sideways. It's consolidating, right? So all it's doing, it's getting it's doing an accumulation of orders in order for the market to go ahead and pick back up and continue its trend to whether it's a new trend, whether it's a continuation of the previous trend, right? A lot of people at this point is keeping their eye at this section right here, because if that's a shift of momentum, remember, one thing that I want you guys to keep in mind is when it comes to market structure, which technically it's a simple version of support and resistance, right? Or it goes hand in hand with support and resistance. These support and resistance areas, or these levels of structure, they will end up being target areas, right? There's something called zone trading. I don't know if you ever heard of zone trading. Zone trading is basically trading from one support level to the other, or one support level to resistance, whatever the case may be, whatever direction is the market going to, that's what you're going to actually really do. And at this point, like I said, the market comes back into this zone. So a lot of people are waiting here to see what does this market do. And at this point, once you see this red candle, right, like I said, look at this, guys. I'm going to go ahead and extend this area right here. We're going to actually go down to the 4-hour time frame so you guys can see how this played out, right? There's actually support and resistance level right here. When we go to the 4-hour time frame, you're going to see the market goes up, pulls back down, right, and then comes back to the previous level of support. Support now becomes resistance. The market comes back down. Same thing here, right? Goes back down to the range, pulls back up, retests that level of support or resistance, and then now comes back, goes down to, if you look to your left, this level right there. Okay, so let's go down to the 4-hour time frame. All right, 4-hour time frame. Like I said, guys, market comes down, up, down, which is the lowest point right here. Market goes up. Now, what happens here? Guys, remember, support and resistance is not a specific price. It's a zone. It's a zone. Okay, that's why it's called support and resistance zones. So anything inside of these two lines right here is considered or at least what I call is a neutral zone. You want to kind of stay away from those zones, and anything outside of that zone then could be an indication that this market is getting ready to go to the opposite direction. So the market comes, retests that zone, comes down, right? Gets very close to retesting the zone, and then the market drops. As the market drops, right, creates a new low, and then we can go ahead and, let's say, move this line here. Market retests, comes back up to this act. It goes actually above the support zone, right? Support now becomes resistance, or in this case, it actually penetrates it and then goes right back down. So there you go. After this red candle right here, you see the actual retest of that zone again, once again, and then the market goes down. Okay, so when you go down to when you look up to the big picture, right, you have to work your way down. It all works together, right? It all works the same. You'll have support and resistance levels on the weekly time frame. They're going to be less, but as you work your way down to the daily and the 4-hour and the 1-hour, you're going to find more support and resistance levels. But if you continue to work and you continue to plot your zones based on the market structure theory, support and resistance levels, you'll be 100% fine as long as you actually know how to enter the market. Like I said, guys, I'll continue to explain this more on a second video. Break it down a little bit more. We'll even go down to the 1-hour time frame. But guys, this is it for today. If you have any questions, please send me a message, hit like and subscribe, and wait future videos. Thank you.